Hello, today I have with me Bill Ackman, one of the world's best known investors and the man behind hedge fund Pershing Square Holdings, now a FTSE 100 company. Hello, Bill, thanks for joining me.
Sure, thanks for having me.
When we last spoke before Christmas, you talked about animal spirits being unleashed as societies emerged from lockdowns. Now, we're seeing that in the UK now. But is the route out of the pandemic and economic progress living up to your expectations?
Yes, I think the U.S. is in a similar place or about to be in a similar place. I'm in New York City. First day I'm in my office actually in quite some time. And, the streets are crowded. There's traffic. There are people walking around. There are people eating outside. So I think you see a lot of, I think the animals are coming out of their den, so to speak.
In terms of the start to 2021, I mean, has the investment outlook for the rest of this year changed following developments in Q1, particularly Joe Biden's first 100 days, I'm thinking?
I think the most important factor this year is the pace of vaccination. If you look at a country by country basis, you see, India in a very disastrous, horrible place. Hopefully they can recover from that. And the UK, the US, Israel, friends sent me some photos and videos on what's going on in Israel, and its life is back to normal. And I just think you're going to see that on a rolling basis throughout the world. And we're the, so to speak, first world, first movers are big beneficiaries.
And what are your thoughts on the stimulus package and some of Joe Biden's other initiatives, as I say, during his first 100 days? Are these, clearly they're positives. Are they enough?
I think I would say people are generally very positive on progress, outperformance on vaccinations, very significant stimulus package passed, checks being sent out, some important steps on environmental, rejoining, Paris Accords, U.S. starting to, take a part in these kind of important discussions. I think from a market's perspective, I think the biggest fear that really relates to tax policy. There've been some, the proposal is a near doubling, a more than doubling in capital gains taxes, and a very large infrastructure plan, in the approaching 3 trillion. And just, I think a bit of fear clearly in the bond market about inflation, about the impact of all this stimulus hitting the economy, along with, if you think about it, you have a combination of vaccinations giving people more confidence. You have this, nearly 2 trillion of stimulus. You have infrastructure stimulus, and you have incredibly low interest rates and a very, I would say, benign policy from the kind of U.S. central bank, right? So it's really setting up for explosive GDP recovery and probably inflation.
Right. Yeah. I was going to ask. So you do buy into that inflation argument? We saw the spike in T-bills sort of a while back, and so that is a real concern for you.
It is, and in fact, actually in December, January, we put on a very large notional, if you will, short of kind of the shorter term part of the Treasury curve as well as kind of the 10-year part of the Treasury curve. Part of my day job, I think about what we do is finding the greatest businesses in the world that we can ideally own forever, and then hedging kind of the black swan type risks. And I think one of the black swan type risks for markets is a real spike in inflation that's not just a 3-month spike, that's more sustained, and also meaningfully higher interest rates, which I think will affect the discount rates that people use to value companies. And I think those could be countervailing stock market forces.
Are we talking a 2021 problem here, or are we spilling over into 22 and 23?
Look, I think we're going to be back to full employment much faster than people expect. If you look at the categories of employment where people have lost jobs, it's been actually education is one of the big categories. Well, all those jobs are going to come back, pretty much immediately or September. And then hospitality, the hotel industry, the restaurant industry, the theater. I think, again, those are going to come back, very, very quickly, I think, by the later part of the year. So I think we'll be back to, by the turn of the calendar year, something close to full employment and near all-time low unemployment rates, and those are the triggers for the Federal Reserve changing, policy. And so I think you could see certainly expectations change as soon as the next few months about how accommodative the Federal Reserve will be. And I think that could be a stock market factor.
Right. So it's not something that private investors can dismiss. They have to take this issue seriously.
Yeah. And you want to own businesses with pricing power. I think inflation is going to be real. You're going to see wage inflation. I mean, everywhere there are help wanted signs, it's very hard to hire people to fill these jobs, particularly with a stimulus package, which includes extra unemployment benefits. So it's a lot of pressure on wages, I think, which I think ultimately is a good thing. But could have again, depending on the nature of the business, could have a negative impact.
Bill Ackman at Pershing Square Holdings, thanks very much for joining me today.
Thank you so much. Appreciate it.